just to get a handle on how cheap is Taiwan's currency, the IMF issues some estimates of purchasing power parity. And just to put purchasing power parity in layman's terms, it means a dollar basket in the U.S. buys me a basket worth something in Taiwan. So by the IMF's estimation, it's not 30, it's more like 13. So that implies that by this measure, then the Taiwan dollar is extremely cheap, undervalued.
The beginning of May saw the new Taiwan dollar move in a way that stunned foreign exchange traders and business media, and which could only be described as unprecedented. Now, between May 2nd and 5th, the NT dollar skyrocketed by as much as 8%. Demand for the U.S. dollar had dropped so much so that reports indicated traditional buyers, including exporters and investors, were mostly in the market looking to sell. Now, just what happened? Could we see that happen again? And what direction is the new Taiwan dollar headed in the short and medium term? For some clarity and to put the event in a regional context, we spoke to Naomi Fink, Chief Global Strategist for Nikko Asset Management in Tokyo, who began by talking about the events as they unfolded.
So, at least from a market observer's perspective, it really appears to be, market expectations. So, I guess you can also call it speculation that there will generally be tolerance toward a lower dollar and a higher currency. And I think that definitely comes in the context of the trade tariffs and ongoing discussions, negotiations. And so I think currency, and not only for Taiwan, for many countries, is seen as a potential tool to alleviate some of these trade tensions. That's one. And then also, longer term, it might actually be a rational decision for large reserve holders, and Taiwan is one, to sell U.S. assets if the expectation is general that the U.S. will no longer be the consumer of last resort. And even, threatening to impose tariffs and wanting to have lower deficits, the other side of that kind of is signaling a little bit to expect the U.S. to curtail its consumption of exports or imports from the U.S.'s perspective.
Okay, so because the NT went up so quickly, was that a sign that the currency was always undervalued? Because that was always the implication, right? That the currency should not have been as low as it was against the U.S. dollar.
That's one side of it, but the other side is that it's possible that the U.S. dollar is overvalued, and not only against the Taiwan dollar too. If we look, for example, at what happened versus the yen, and yes, the yen was very, very cheap by many, many measures. If we look at purchasing power parity, we're way, way off. And only now are we coming to the higher end of the range of the shorter term uncovered interest rate parity type fair value for the yen. And so that adjustment started happening before the NT, and it happened. Even though it was more volatile than it was in early 2024, for example, then that was already considered a little bit more volatile. And so I guess, yes, the NT, the move, the surprising characteristic might have been the volatility, but the adjustment happened with a lag to the adjustment in the yen, for example. So it's not just the NT, it's a lot of currencies probably that have this, and especially currencies in the Asia Pacific region that has a lot of surplus holders in it.
Okay, can you put this into perspective for everyone in layman's terms? What happened? What did that mean for Taiwan? What did that mean for other currencies within the region?
Sure. So I guess let's start at the beginning of April, when the tariffs were first threatened or declared, even though they were rolled back. The thing that was very clear when those tariffs were threatened was that the main target of the tariffs were large surplus economies, most of them residing in Asia, and most of them having large foreign reserves, most of which are denominated in U.S. dollars. So Taiwan is one of many countries in the region that has these characteristics. Now, also another characteristic of a lot of these countries is that we've had relatively low inflation, and so we've had a yield differential that has favored the dollar. So there were a lot of carry trades going on. And so and the carry trades were trades that basically financed purchases of U.S. assets, so U.S. treasuries, by selling local currency. And so Taiwan dollar was one of these. So then the tariffs were declared. Then an adjustment started happening overall in the dollar and in the U.S. bond market, as well as in the U.S. stock market. But just to start focusing on the bond market because it's relevant to currencies, then it seemed like the market was generally losing faith in the idea that you'd have this steady yield differential forever, so that you'd have this situation where you could just sell a low yielding currency like the yen, like the Taiwan dollar, and buy dollars. So that happened before this NT adjustment. And I think most recently, the catalyst for this delayed adjustment in NT has been the negotiations, because this is happening country by country. So Taiwan is having to negotiate separately from Japan, separately from China. It's very much kind of a bilateral situation. So, what's one big thing that is likely to attract attention? Well, it's the relative cheapness of Taiwan's currency. Now, just to get a handle on how cheap is Taiwan's currency, the IMF issues some estimates of purchasing power parity. And just to put purchasing power parity in layman's terms, it means a dollar basket in the U.S. buys me a basket worth something in Taiwan. So by the IMF's estimation, it's not 30, it's more like 13. So that implies that by this measure, then the Taiwan dollar is extremely cheap, undervalued.
There have been a lot of talk that the central bank intervened or didn't intervene to allow the NT to slide like this. What is your opinion? I realize that we're moving into the area of speculation, but do you think there was any action on the part of the Taiwan Central Bank to allow the currency to drop like this, or was there no action at all?
So the Taiwan Central Bank, when it intervenes, what does it do? It basically buy U.S. dollars, usually, surplus holding countries. They'll buy U.S. dollars and invest in U.S. treasuries. Taiwan has a stock of almost, I think, latest it was like $580 billion worth, and 80% of this is in dollars. So when you have a surplus like that, you have to keep buying dollars if you want to keep your currency low. So it might be more of a case in a situation where there's pressure on the dollar to devalue that the central bank may not have done anything. And then if you have a surplus and people are just generally selling dollars, then that means even if you don't do anything, then your currency might appreciate. But the new Taiwan dollar, it's not like there's a currency peg in place. So you wouldn't expect the central bank to come in every single time there's a move in the US dollar.
What kind of longer term expectations do we have in terms of the new Taiwan dollar's performance vis-a-vis the US dollar?
So it's our view as a firm that a weaker dollar is justified over time. I mean, the dollar by many, many measures is overvalued, especially versus the yen and many Asian currencies. And there are some signals from the U.S. government, especially in the form of trade tariffs, kind of saying that it wishes to consume fewer imports. And so that does provide a strong signal to exporter countries with large reserves. I would even say that if this is a true signal, it would be rational for countries with large reserves. And I'm not saying they're liquidating treasuries, but I would say that at some point it would be rational to thin off some of those holdings and invest it instead in domestic demand, which is your buffer if you do have external shocks.
Okay, so do we have figures for support and resistance in terms of the NT dollar versus the US dollar, and what would they be? Or is that going too far into speculation?
So, I mean, I have to say I'm not a technical analyst, so I don't really look at these technical levels, but if we're looking at fundamental levels, the Taiwan dollar over time should probably have quite a lot of room to appreciate. I mean, if we think of this 30 versus 13, right?
Right.
I don't think it will get there tomorrow. In fact, I hope, if we had that type of sudden move, it would probably mean some sort of shock event, some sort of risk aversion. It's similar with the yen. When you have gradual strengthening of the yen, then it's not that big a problem because a lot of companies in Japan are importers, and in fact, we have inflation in Japan. So cheap yen isn't really as great at these levels as it once was. So gradual appreciation is not such a big deal. It makes the Bank of Japan's life easier because it can curb inflation. And so I think similarly for if we think of it in the Taiwan dollar context, I think that the most recent move was sudden. It's not at a level now where we haven't been before, in the last couple of years. What we don't really want is just some runaway speculation trend strengthening that happens too quickly, because that doesn't give the economy, companies, time to adjust. So I think if we had a gradual move over time, that would be okay. That could help Taiwan also reallocate, from a policy perspective, maybe adjust more toward domestic demand, much like, Japan has to do, like China has to do as well. If we had a sudden volatile move, that would probably be a lot more damaging to sentiment, because there are a lot of exporters. I think even some companies were releasing estimates about how large a hit their earnings would take with a 1% move in US dollar Taiwan dollar. So what we would rather have is a gradual move over time rather than a massive move over a short period of time. So I think if we had a gradual move over time, that would be okay. That could help Taiwan also reallocate, from a policy perspective, maybe adjust more toward domestic demand, much like, Japan has to do, like China has to do as well. If we had a sudden volatile move, that would probably be a lot more damaging to sentiment, because there are a lot of exporters. I think even some companies were releasing estimates about how large a hit their earnings would take with a 1% move in US dollar Taiwan dollar. So what we would rather have is a gradual move over time rather than a massive move over a short period of time.
How do you think a more expensive NT dollar will in the medium term and in the long term affect Taiwan's economy?
So I think in the short term, it can't help but be a headwind for exporters. However, it's also, if we can have an orderly strengthening, it is a signal for both the exporters, the firms as a whole, as well as policymakers, that it's time to readjust the economy. And so what we would probably want to see is a more domestic growth focus. And so we maybe want to stimulate domestic demand, which might mean in the short term, greater fiscal expenditure. But what you want to do over time is keep the economy out of deflation. Like, I think that's China's challenge, for example, right now. We want to keep the economy out of deflation with healthy domestic demand, because even if you offer fiscal stimulus in the short term, by keeping the economy non-deflationary and domestic demand growing, you can inflate your way out of debt. So domestic demand is very, very important for probably all economies that have these export large surpluses, the reserves, softer domestic demand than external demand. It's a question of rebalancing. So Taiwan similarly probably has to rebalance and prepare for a more uncertain export outlook, but then try to establish a buffer, a nice solid domestic demand buffer.
You were listening to Naomi Fink, Chief Global Strategist for Nikko Asset Management. I'm Hope Go. Thank you for tuning in.